Have you ever found yourself staring at a sea of red in your trading account and wondered, how did I get here? That moment when you realize the last 10 trades you've placed were born not from strategy, but from that relentless inner voice demanding action, any action, just to feel like you're part of the market's movement? This seemingly innocent urge to always be in the game might be the very thing silently destroying your trading career. In a world obsessed with constant activity where hustle culture dominates and smartphones keep us perpetually connected to price movements, the most powerful trading decision you'll ever make might surprise you. It's not which indicator to use. It's not your position sizing. It's not even your entry technique. It's knowing when to do absolutely nothing. Has this ever happened to you? The markets are moving, volatility is picking up, and you feel that irresistible magnetic pull to jump in. Your finger hovers over the buy button, not because your strategy has given you a clear signal, but because you can't bear the thought of missing out. This precise moment, this decision point, is where most trading careers begin their slow death spiral. The legendary market analyst Richard Wyckoff understood something profound that most traders never grasp. The market doesn't reward action, it rewards correct action at the right time. After studying the behavior of the most successful operators of his day, he concluded that patience wasn't just another skill in a trader's toolkit. It was the fundamental virtue separating those who build lasting wealth from those who vanish before their first meaningful profit. Stay with me until the end of this video, because what you're about to discover might completely transform how you approach the markets. Imagine for a moment what your trading account would look like if you only executed trades when all your conditions aligned perfectly. What if your edge isn't found in your technical analysis or your exit strategy, but in your ability to wait for the precise moment when probability massively favors your position? Think about it. What if the most profitable thing you could do today wasn't placing a trade, but refusing to place one? This isn't about temperament or personality. It's about understanding that the market moves according to its own rhythm, not yours. The greatest traders aren't necessarily the ones with the most sophisticated strategies or the fastest execution systems. They're the ones who have mastered their own psychology and developed the rare ability to sit in stillness when the market doesn't offer optimal conditions. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. What fascinates me most about this concept is how counterintuitive it seems in our action-oriented world. We've been conditioned to believe that success comes from constant activity, that results require perpetual motion. Yet in trading, this cultural programming works directly against us. The impatient trader forces trades and mistakes activity for progress. They chase shadows instead of hunting opportunity. They react to every tick, every candlestick formation, every news headline, exhausting their mental capital and eventually their financial capital too. The market has a particularly cruel way of punishing this behavior. It's almost as if it can sense desperation, moving against the impatient trader with uncanny precision. And this isn't just theory or market folklore, it's mathematics. What's truly fascinating is the transformation that occurs when you finally understand that waiting creates wealth. My journey in the markets has revealed a hidden truth that contradicts everything the financial media wants you to believe. The greatest profits don't come from constant trading, they come from perfect setups. If this approach to patient trading resonated with you, hit that subscribe button to join our community of disciplined traders who understand that true edge comes from mastering psychology, not just technical analysis. I still remember the revelation I had after analyzing my trading journal over a 5-year period. The results were shocking. Out of hundreds of trades, just seven, yes, seven, accounted for over 80% of my total profits. These weren't random lucky strikes. They were trades where I waited patiently for all my conditions to align perfectly. Trades where I had the discipline to watch the market for weeks, sometimes months, waiting for that precise moment when my edge was at its maximum. This mindset shift changed everything for me. Instead of seeing trading as a daily activity that required constant participation, I began to see it as a selective process of finding the extraordinary among the ordinary. The impact on both my account and my psychology was immediate. My balance grew steadily rather than erratically. My stress levels decreased dramatically. I stopped fighting the market and started flowing with it. Now, I want to go even deeper into this topic by exploring a critical misconception about patience in trading. Many assume that patience means passivity, sitting idly, staring blankly at charts, doing nothing. This couldn't be further from the truth. What Wyckoff understood decades ago and what remains true today is that patience isn't passive. It's the most active form of preparation. It's the quiet discipline of studying, analyzing, and waiting for your moment while others lose theirs. It's building watch lists, refining criteria, studying market structure, reviewing past trades, and strengthening your psychological muscles. Behind the scenes of successful trading is this intense preparation that outsiders never see. While the impatient trader jumps from setup to setup, depleting both capital and confidence, the patient trader is engaged in deep market study, building a mental database that will serve them for years to come. This discipline of strategic silence is perhaps the hardest skill to develop in our hyper-connected, instant gratification world. Most traders cannot tolerate the void between genuine opportunities. Their fingers get itchy. Their minds start rationalizing subpar setups. They convince themselves they can somehow outsmart time itself. What I've learned through countless market cycles is that the journey to mastering patience begins with understanding your own triggers. What makes you jump into trades prematurely? Is it fear of missing out? Is it boredom? Is it the need to feel productive? Recognizing these patterns is the first step toward transformation. Type "patience is power" in the comments if you've ever experienced that inner battle between wanting to trade and knowing you should. Wait, that tension is where growth happens, and I'd love to hear about your experiences with it. The stark difference between amateur and professional traders becomes clearly visible when you observe how they respond to market opportunities. Professionals possess what I call the power of waiting. They allow the market to come to them rather than chasing every movement. Amateurs, by contrast, are constantly reacting, jumping at shadows, and getting whipsawed by normal market fluctuations. I experienced this revelation firsthand while watching a particular stock several years ago. This company was building what Wyckoff would call a classic cause, a base pattern that was developing over weeks. The price action was choppy, testing both support and resistance multiple times. During this accumulation phase, I witnessed dozens of traders jumping in prematurely, convinced each minor breakout was the big one. Each time they were ruthlessly shaken out as the price pulled back. The transformation in my own approach came when I recognized that these premature entries weren't just random mistakes. They were systematic failures of discipline. Instead of following the crowd, I focused on waiting for genuine confirmation, increased volume on breakouts, tests of new support levels that held, and other signs that smart money was truly committed to higher prices. When that moment finally arrived, when price broke through resistance on massive volume and successfully retested the breakout level, I entered decisively with size appropriate to my conviction. What followed was a sustained uptrend that generated more profit from that single position than hundreds of smaller, mediocre trades could have produced. This experience crystallized a fundamental truth. The professional's edge often isn't found in superior analysis or exotic indicators, but in the mental discipline to wait for the highest probability moments. It's about quality over quantity, a mindset shift that goes against our natural desire for constant action. But here's a secret that rarely gets discussed in trading circles. Most traders fail not because they lack intelligence or even a workable strategy. They fail because they can't endure boredom. This revelation may sound trivial on the surface, but it highlights a profound psychological barrier that separates the professional from the amateur. Boredom in trading manifests as that restless feeling when the market isn't providing clear opportunities that match your criteria. It's that voice in your head whispering, maybe this setup is close enough, or I have a good feeling about this one. These moments of weakness represent critical decision points in your trading journey where your discipline is truly tested. What happens behind the scenes is fascinating. Traders begin with clear, well-defined criteria for what constitutes a valid trading opportunity. But as days pass without those exact conditions materializing, they start making compromises. They gradually lower their standards, rationalizing mediocre setups as intuition or reading between the lines. This subtle shift, this abandonment of discipline, is often so gradual they don't even realize it's happening. I've witnessed this transformation countless times, even in traders with exceptional analytical abilities. They start with rigid rules, but end up taking trades that barely resemble their original criteria. If you've recognized yourself falling into the trap of chasing trades rather than patiently hunting for the perfect setup, type "hunter not chaser" in the comments. This awareness is the first step toward elevating your trading approach. Consider the difference between hunting and chasing as a powerful metaphor for trading psychology. Patient traders adopt the hunter's mindset. They study their prey, understand its habits, position themselves strategically, and wait for the perfect moment to strike. They conserve energy, knowing that precision and timing matter far more than activity. The hunter understands that opportunity isn't something you chase, it's something you prepare for and then seize at exactly the right moment. Impatient traders, however, embody the chaser. They're constantly pursuing, reacting to every movement, expending enormous energy with minimal results. This fragmentation of focus is exhausting both mentally and financially. They chase shadows instead of waiting for substance, believing that more activity will somehow lead to better results. The hidden wisdom in this approach extends beyond just avoiding bad trades. It fundamentally changes how you perceive the market. Instead of seeing it as a chaotic environment that must be tamed through constant engagement, you begin to view it as a flowing river of opportunity where strategic positioning and patience yield far greater returns than frenetic activity. Building genuine wealth in the markets requires three elements that run counter to our instant gratification culture. Silence to hear what the market is truly telling you. Precision in executing only your highest conviction ideas, and timing that comes not from prediction, but from patient observation of how price develops. One of the most profound revelations in my trading journey came when I realized that structure creates patience. This insight completely transformed my approach to the markets. You simply cannot wait effectively if you don't know precisely what you're waiting for. Without clear defined criteria, patience becomes an abstract concept rather than a practical trading tool. This hidden truth explains why so many traders struggle with consistency. They claim they want to be patient, but they haven't defined what patience means in concrete terms. It's like telling someone to wait for the right person without having any idea what qualities that person should have. The ambiguity makes discipline impossible. Subscribe now to transform your trading journey with insights that most educators never share. where we focus on the psychological dimensions that separate consistently profitable traders from those who struggle regardless of their strategy. Developing your structure, your specific repeatable pattern, is the foundation of trading success. For me, that structure involves price action, confirming a change in market phase, volume patterns supporting the move, and a favorable risk-to-reward ratio. When I clearly defined these elements, something magical happened. I stopped feeling like I was missing moves because I recognized that the market provides endless opportunities if you wait for your specific setup. This mindset shift is truly liberating. Instead of feeling pressured to catch every market movement, you focus only on the setups that match your criteria. The market becomes an endless stream of opportunities rather than a series of missed chances. The key is defining what your ideal trade looks like with such clarity that you can immediately recognize it when it appears. And just as importantly, recognize when a setup doesn't meet your standards. The journey to developing this structure isn't always straightforward. It requires introspection, testing, and refinement. You must discover which market conditions work best with your psychology, time frame, and risk tolerance. This self-discovery process is as much about understanding yourself as it is about understanding the market. If you've discovered that having clear trading rules actually makes decision-making easier, not harder, write "structure equals freedom" in the comments. It's a paradox that most people outside of trading struggle to understand. But structure isn't only important for entries, it's equally crucial for exits. This is where one of the most profound revelations in my trading journey emerged, learning to distinguish between patience and hope. They may appear similar on the surface. Both involve waiting, but the underlying mindset creates dramatically different outcomes. This distinction represents a critical turning point for anyone serious about mastering the markets. Patience is rational. It's grounded in strategy, analysis, and evidence. When you're being patient, you're waiting for specific conditions that your testing has shown lead to profitable outcomes. You have clear criteria, and you're simply allowing the market time to meet those criteria. This waiting comes from strength and conviction. Hope, on the other hand, is purely emotional. It's what happens when a trade moves against you, but instead of following your exit plan, you hope the market will turn around. It's what makes traders average down on losing positions or ignore their stop losses. Hope is waiting without structure, without evidence. It's essentially waiting for a miracle. This distinction transformed my trading psychology. I realized that many times when I thought I was being patient with underwater positions, I was actually hoping. I wasn't following a strategy. I was abandoning it and replacing it with wishful thinking. The market doesn't deliver miracles. It delivers mathematics, probability, and human psychology made visible through price. The revelation comes when you understand that patience builds discipline while hope destroys it. Every time you abandon your rules and resort to hope, you weaken your trading muscle. Every time you exercise true patience, waiting for your edge, following your plan regardless of emotional discomfort, you strengthen that muscle. Now let's explore another dimension of patience that Wyckoff emphasized, respecting the market's natural rhythm. Markets, like everything in nature, move in cycles. They have seasons: accumulation, markup, distribution, markdown. They have moods: trending, ranging, volatile, quiet. Each of these phases requires a different approach, a different strategy, a different kind of patience. I've witnessed remarkable transformations when traders finally embrace this truth, and I've seen fortunes evaporate when they refuse it, when they stubbornly apply yesterday's strategy to today's entirely different market conditions. The market doesn't reward those who ignore its rhythm. It punishes them with brutal efficiency. Behind the scenes of nearly every trading blow-up is this same story. A trader who made money in one market environment refuses to adapt when that environment changes. They keep forcing the same setups, the same time frames, the same position sizing even as the market clearly signals that conditions have shifted. This is where another counterintuitive truth emerges. Sometimes sitting out is itself a strategic position. There are periods in the market when the highest probability move is no move at all. When conditions are unclear, when volatility is excessive, when your particular edge isn't present, preservation of capital becomes the primary goal. The discipline to recognize when to step aside, to acknowledge that the market owes you nothing and that opportunities will always return, is perhaps the ultimate expression of trading maturity. This perspective shift transforms sitting on the sidelines from feeling like failure to recognizing it as strategic wisdom. Write "patience, not hope" in the comments if you've ever caught yourself hoping rather than following your trading plan when a position moved against you. We've all been there, and recognizing this pattern is the first step toward breaking it. The journey toward this level of self-awareness isn't easy. It requires honest self-reflection about whether your waiting comes from sound strategy or emotional attachment. One of the most striking revelations I've experienced while studying elite traders is their remarkable comfort with doing nothing. This trait seems simple on the surface, but represents a profound psychological achievement. The best traders I've known could watch the markets all day, analyzing, studying, observing, without placing a single order if their specific setup didn't materialize. This comfort with inaction runs counter to everything our achievement-oriented culture teaches us. We're conditioned to believe that success comes through constant activity, that results require perpetual motion. Yet in trading, this cultural programming works directly against us. The elite trader has undergone a fundamental mindset transformation, recognizing that strategic inaction often yields greater results than impulsive action. What's fascinating is that this ability isn't about prediction, it's about patience. These traders aren't trying to forecast exactly where the market will go. Instead, they wait until enough evidence accumulates, until multiple factors align in their favor. Only then do they act, but when they do, it's with absolute conviction. This alignment of patience and conviction creates a powerful trading approach that few can master. I remember observing a legendary trader who would sit at his desk for days, sometimes weeks, without entering a position. To the untrained eye, it appeared as though he wasn't working at all. But behind the scenes, he was engaging in intense market study, building his mental database, preparing for the moment when everything clicked into place. When that moment arrived, he would deploy capital with a decisiveness that left others in awe. This comfort with doing nothing isn't passive. It's a disciplined state of readiness. It's the gunslinger who doesn't draw until the perfect moment, knowing that one precisely timed shot is worth more than a dozen hasty ones. But here's another critical revelation. Patience must extend beyond your entries to your exits as well. This is where many traders falter on their path to consistency. They develop the discipline to wait for the perfect entry, only to abandon that same discipline when managing the trade. The psychology at work here is fascinating. The same patience that guides a well-executed entry often evaporates once real money is on the line. I've witnessed countless traders grab small profits out of fear, cutting their winners short while letting their losers run, the exact opposite of what leads to long-term profitability. The emotional relief of securing a small profit overwhelms the logical decision to let the trade develop according to plan. This moment of decision, this battle between fear and discipline, is where trading accounts are made or broken. My greatest trades, the ones that truly moved the needle in my trading account, came not just from patient entries, but from patient exits. I've held positions through significant market volatility, through days when sentiment shifted wildly because my analysis gave me conviction, respecting the market's natural rhythm, understanding that price doesn't move in straight lines, that pullbacks and consolidations are normal within larger trends. These insights allowed me to stay in positions that eventually delivered outsized returns. If you recognize the internal struggle between taking quick profits and letting winners run, write "full cycle patience" in the comments. This acknowledgement of the challenge is the first step toward mastering both sides of the trade. The authentic truth is that patience in trading is a holistic practice. It must permeate every aspect of your approach, from analysis to entry to management to exit. Each phase requires its own form of patience, its own structure, its own discipline. Now, I want to share another dimension of patience that transformed my trading journey. Understanding that sometimes preservation of capital is the primary objective. During unclear market conditions, when volatility is excessive, or when your specific edge simply isn't present, the highest probability move isn't a clever entry or a sophisticated hedge. It's no move at all. This perspective shift is profound because it runs counter to our natural desire to always be doing something, to always be making progress. The discipline to recognize when to step aside, to acknowledge that the market owes you nothing and that opportunities will always return, is perhaps the ultimate expression of trading maturity. It represents a level of self-awareness that few traders ever achieve. I've seen accounts devastated because traders couldn't accept that some market environments simply don't align with their strategy. Behind the scenes of sustained trading success is this invisible skill, knowing when to do nothing. It's a skill that receives little attention in trading education, but has saved my capital countless times. There are periods in every market when the signal-to-noise ratio is simply too low, when the market lacks clear direction, or when external factors create unpredictable outcomes. During these times, the revelation that shifted my approach was simple yet powerful. Sitting on the sidelines isn't failure, it's strategic wisdom. It's the professional golfer who lays up rather than trying a miracle shot over water. It's the chess master who positions pieces patiently rather than launching a premature attack. It's the martial artist who conserves energy, waiting for the opponent to reveal a weakness. This transformation in perspective doesn't happen overnight. It emerges through experience, through the painful lessons of losing capital by forcing trades in unfavorable conditions. Over time, you develop an intuitive understanding of when the market is offering genuine opportunity versus when it's setting traps for the undisciplined. This brings me to perhaps the most important insight about patience in trading. It isn't something you achieve once and then possess forever. It's a muscle that strengthens with use and atrophies with neglect, a daily practice that requires constant reinforcement. The journey toward mastering patience never truly ends. Each time you reject a mediocre setup, each time you recognize the temptation to trade for trading's sake and resist it, you strengthen your edge. Each time you withstand market noise without reacting, you sharpen your focus. These small daily victories compound over time, transforming not just your trading results, but your entire relationship with uncertainty. I've witnessed the power of this compounding effect in my own trading and in the journeys of traders I've mentored. The initial stages are often challenging. The discipline feels unnatural, the restraint uncomfortable. But gradually, almost imperceptibly, something shifts. What once required conscious effort becomes second nature. The need for constant action diminishes. The capacity to wait strengthens. This evolution represents one of the most profound inner transformations a trader can experience, from reactive to strategic, from impulsive to deliberate, from chasing the market to allowing opportunity to come to you. If you're working on developing patience as an ongoing discipline, rather than seeking a quick fix for your trading, type daily practice in the comments. This journey is challenging but infinitely rewarding. Mastering patience is essentially mastering timing, and mastering timing is mastering the market itself. Now I want to explore a powerful concept that changed my entire perspective on waiting in the markets. The idea of building potential energy. Think of patience in trading like a coiled spring. Every day you spend studying the market without trading. Every hour you invest in refining your analysis without taking action. You're compressing that spring, building potential energy. When most traders see inactivity, what's really happening is an invisible accumulation of power, while others are frantically trading, depleting their capital on subpar setups. You're conserving yours. While they exhaust themselves emotionally reacting to every price movement, you maintain equilibrium. While they scatter their focus across dozens of mediocre opportunities, you sharpen yours on the few extraordinary ones. In this waiting, you become dangerous. You transform into a predator in the financial wilderness, appearing motionless while every sense is alert and prepared for the perfect moment to pounce. This state of heightened awareness combined with physical restraint is what separates the elite trader from the average. I remember a particularly enlightening period in my career when I went nearly 6 weeks without placing a single trade. My colleagues thought I'd lost interest or courage. Some even questioned whether I was experiencing burnout. Little did they know that I was more engaged than ever, more present, more focused on the subtle shifts in market structure, volume patterns, and price action. I was waiting for what Wyckoff called the composite operator to show his hand. And when that moment finally arrived, when price, volume, and time aligned perfectly with my analysis, I struck with absolute precision and conviction. That single trade, born from weeks of patient observation, yielded more profit than dozens of mediocre setups could have produced. Beyond the financial returns, there's another dimension to patience that rarely gets discussed but might be even more valuable. What I call the peace of mind premium. Trading becomes fundamentally less stressful when you embrace the art of not trading as a strategic advantage. The impatient trader lives in a constant state of anxiety, always chasing, always reacting, always second-guessing. Their trading experience is marked by stress, doubt, and frequent regret. The patient trader, by contrast, experiences the market differently. They move with it rather than against it. They respect its rhythm rather than fighting it. They understand that opportunity isn't scarce but abundant if you're willing to wait for the right conditions. This transformation in experience is perhaps the most profound benefit of mastering patience. Your relationship with the market shifts from adversarial to harmonious. You stop seeing it as something to be conquered and start seeing it as something to be understood and respected. Trading becomes not just more profitable, but more enjoyable, more sustainable over the long term. What Wyckoff understood decades ago remains profoundly true today. The market doesn't reward those who act first, but those who act right. And being right takes patience. The patience to wait for clarity, the patience to wait for confirmation, the patience to wait until the trade feels almost effortless because everything aligns so perfectly. If you've noticed that your best trades often came after periods of disciplined waiting, write "spring-loaded" in the comments to share that experience with our community. The journey toward this mastery of patience is ongoing, filled with both setbacks and breakthroughs. As we wrap up today's exploration of what might be trading's most undervalued skill, I hope you've gained a deeper appreciation for patience, not just as another technique, but as the foundation that makes all other trading skills effective. This journey of mastering the art of not trading isn't one you have to walk alone. Our community of thoughtful traders is growing every day, sharing insights and supporting each other through the challenges of market discipline. What fascinates me most about teaching these psychological dimensions of trading is watching the transformation in traders who finally Grasp this counterintuitive truth that sometimes the most powerful position is no position at all, that wealth in the markets often comes not from more action, but from more selective, precise action. If this perspective on trading resonated with you, consider joining us by subscribing. Each week, we dive deep into these hidden psychological edges that most educators never touch. The real factors that separate consistent profitability from perpetual frustration. The transformation we've discussed today doesn't happen overnight. It's a process, a daily practice of small choices that compound into remarkable results over time. If you found value in today's discussion, a simple like lets me know we're exploring topics that actually matter to your trading journey. If you've made it all the way to the end of this exploration, leave a comment saying, "Patience is my edge now," so I can recognize you as someone committed to this deeper approach to trading. Your engagement makes these deeper conversations possible. The principles we've explored today connect directly with market structure reading, which is where this patience gets applied in real-time trading decisions. There's a video right here on exactly how to identify the highest probability setups using Wyckoff's market structure approach. Click and continue the journey with me there, where we'll transform these psychological principles into actionable trading techniques. Remember, in markets and in life, those who master patience don't just preserve capital, they preserve something far more valuable, their peace of mind.